Hello, and welcome to my channel, Gar Web. My name is Ibad Ullah, and today we're diving into a very important topic, how to pay taxes in the USA. Whether you're new to the country or just need some guidance, this video will walk you through the basics of tax payments, ensuring you stay on the right side of the law and make the process as smooth as possible. Let's get started. Paying taxes in the United States may seem complicated, but it follows a clear process. Below is a step-by-step guide that explains who needs to pay taxes, how much they need to pay, and the steps to do so. Understanding who needs to pay taxes. U.S. citizens and residents. All U.S. citizens and residents, including green card holders, are required to pay federal income tax on their worldwide income, regardless of where they live or where the income is earned. Non-residents. Non-residents who earn U.S. source income, for example, through work, investments, or business activities, must also pay tax, but only on their U.S. source income. Dependents. If a dependent, like a child, earns more than a certain amount from work or investments, they may need to file a tax return and pay taxes. Determining how much tax you need to pay. Types of income. The amount of tax owed depends on the type of income earned, such as wages, interest, dividends, or capital gains. Tax bracket. The U.S. tax system is progressive, meaning the more you earn, the higher your tax rate. For 2023, federal income tax rates range from 10% to 37%, depending on your income level. Deductions and credits. You can reduce your taxable income by claiming deductions, like the standard deduction or itemized deductions, and tax credits, such as the child tax credit or earned income tax credit. Submission of necessary documents. W-2 form. If you are employed, your employer will provide you with a W-2 form, which shows your income and the amount of tax withheld. 1099 forms. If you are self-employed or have other types of income, you may receive 1099 forms detailing your income. Other documents. Collect receipts, expense records, and any other relevant financial documents that can be used for deductions or credits. Filing your tax return can seem like a daunting task, but don't worry, we're here to help. First, you need to choose a filing method. You can file your tax return electronically using tax software like TurboTax or H&R Block, or by manually filling out and mailing IRS forms. Next, it's important to select the correct tax form. Form 1040 is the basic form for filing federal income taxes. There are also additional forms, known as schedules, such as Schedule A for itemized deductions or Schedule C for self-employment income. Once you've got everything ready, it's time to file your return. Remember, tax returns are usually due by April 15th each year, but you can request an extension if needed. Now, let's talk about paying your taxes. After completing your tax return, you'll need to estimate your tax liability to know how much you owe. There are several payment options available. You can pay your taxes online through the IRS website, by phone, or by mail. The IRS offers various payment methods, including direct debit, credit card, and installment agreements. If you're an employee, your employer withholds taxes from your paycheck. However, if you are self-employed, you may be required to make quarterly estimated tax payments. In addition to federal taxes, you also need to consider state and local taxes. Most states have their own income tax systems, with rates that can vary widely. You will need to file a separate state tax return if required. On top of that, some cities and regions impose additional taxes, which may require separate filing. It's important to be aware of all these requirements to ensure you're compliant with both state and local tax laws. Staying in compliance with your tax obligations is crucial. Keep records. Make sure to keep copies of your tax return and supporting documents for at least 3 years. Respond to IRS notices. If the IRS contacts you about your return, respond promptly to avoid penalties. And get professional help. If your tax situation is complicated, consider hiring a tax professional or accountant. So, what happens if you don't pay taxes? Well, penalties and interest. Failure to collect or pay taxes on time may result in penalties and interest on the amount owed. Legal consequences. In serious cases, failure to pay taxes can lead to legal action, including fines or imprisonment. The result can be quite severe, so it's important to stay on top of your tax responsibilities. Your tax filing status determines the tax brackets you fall into and the deductions you can claim. Common filing statuses include single, for individuals not married on the last day of the tax year; married filing jointly, for married couples who choose to file a combined tax return; married filing separately, for married couples who file separate tax returns; head of household, for individuals who are unmarried and pay more than half the cost of keeping up a home for themselves and a qualifying person; and qualifying widower with dependent child, for individuals whose spouse died during the last 2 years and who have a dependent child. Tax deductions and credits can significantly reduce your tax liability. Here's how they work. Standard deduction versus itemized deductions. The standard deduction is a fixed amount you can deduct from your taxable income. The amount varies by filing status. Itemized deductions include deductions for mortgage interest, medical expenses, charitable contributions, and state, local taxes. You would itemize if your deductions exceed the standard deduction. Tax credits. Unlike deductions, which reduce your taxable income, tax credits reduce your tax bill dollar for dollar. Examples include: the Earned Income Tax Credit, or EITC, is a credit for low to moderate income working individuals and families. The Child Tax Credit is for taxpayers with qualifying children under 17. Education credits, such as the American Opportunity Credit and the Lifetime Learning Credit, are available for qualifying education expenses. If you're self-employed, you are responsible for paying both the employee and employer portions of Social Security and Medicare taxes, known as the self-employment tax. Here's what you need to know. Self-employment tax rate. As of 2023, the self-employment tax rate is 15.3%, which includes 12.4% for Social Security and 2.9% for Medicare. Deductions. You can deduct half of your self-employment tax when calculating your adjusted gross income, or AGI. Estimated tax payments. You may need to make quarterly estimated tax payments if you expect to owe at least $1,000 in tax after subtracting your withholding and refundable credits. Investors need to be aware of how their gains and income are taxed. Capital gains tax. If you sell an asset like stocks or real estate for more than you paid for it, you may owe capital gains tax. The tax rate depends on how long you held the asset. Short-term capital gains are taxed at your ordinary income tax rate if held for less than a year. Long-term capital gains are taxed at reduced rates of 0%, 15%, or 20% depending on your income level, if held for more than a year. Dividend income. Qualified dividends are taxed at the long-term capital gains tax rates, while non-qualified dividends are taxed at ordinary income tax rates. Retirement accounts and tax planning. Contributions to retirement accounts can provide immediate tax benefits and help you save for the future. Traditional IRA and 401k contributions are often tax deductible, reducing your taxable income in the year of contribution. Withdrawals are taxed as ordinary income. Roth IRA and Roth 401k Contributions are made with after-tax dollars, but withdrawals in retirement are tax-free. Required minimum distributions, or RMDs. Starting at age 73, you must begin taking minimum distributions from most retirement accounts, and these distributions are taxed as ordinary income. Alternative minimum tax, or AMT. The AMT is designed to ensure that high-income individuals pay a minimum level of tax, even if they use deductions and credits to reduce their regular tax liability. Who it affects. The AMT primarily affects higher income taxpayers with large deductions, such as from state taxes, home mortgage interest, or large families. Calculation. The AMT requires a separate calculation using fewer deductions and different tax rates. If your AMT liability is higher than your regular tax, you must pay the AMT amount. Tax penalties and interest. Failing to comply with tax laws can result in penalties and interest charges. Failure to file penalty. Typically 5% of the unpaid taxes for each month or part of a month that a tax return is late, up to 25% of the unpaid taxes. Failure to pay. Penalty. Generally 0.5% of your unpaid taxes for each month your payment is late. Underpayment. Penalty. If you don't pay enough taxes through withholding or estimated tax payments, you may be subject to an underpayment penalty. Tax audits. The IRS may choose to audit your tax return to ensure its accuracy. There are different types of audits to be aware of. First, we have the correspondence audit, which is conducted by mail. It's the most common and least complex. Then there's the office audit, conducted at an IRS office. Lastly, there's the field audit, which takes place at your home or business. Now, what triggers these audits? Common audit triggers include large charitable donations, high deductions relative to income, and discrepancies between reported income and what's reported by third parties, such as W-2s and 1099s. Tax resources and help. If you need assistance with your taxes, several resources are available. The IRS website offers forms, publications, and tools like the Tax Withholding Estimator. There's also the Volunteer Income Tax Assistance, or VITA, which provides free tax preparation services for low to moderate income taxpayers. VITA also assists the elderly and those with disabilities. You can also seek help from tax professionals, like certified public accountants. Enrolled agents can provide personalized tax advice. Tax attorneys can assist with preparation services. Lastly, tax software programs like TurboTax, H&R Block, and TaxAct can guide you through filing your taxes. Tax considerations for expats. U.S. citizens and resident aliens living abroad still need to pay U.S. taxes on worldwide income, but there are special rules and credits available. Foreign Earned Income Exclusion, or FEIE, allows you to exclude a certain amount of foreign earned income from U.S. taxation. The Foreign Tax Credit. If you pay taxes to a foreign country, you can often take a credit or deduction on your U.S. taxes. Filing extensions are typically granted to expats, giving them an automatic 2-month extension to file their tax return. But keep in mind, interest on taxes owed still applies from the original due date. Staying organized and planning ahead is crucial. Tax planning is essential to minimize your tax liability and avoid surprises. Keep records year-round. Maintain organized records of your income, expenses, and any other tax-related information. This will make filing easier and ensure you don't miss any deductions. Review withholding. Check your tax withholding periodically, especially after major life changes like marriage, divorce, or the birth of a child. Use the IRS's Tax Withholding Estimator to avoid underpayment or overpayment. Plan for life events. Major life events such as buying a home, having a child, or starting a business can significantly impact your tax situation. Consider these when planning your finances. Filing an amended return. If you discover an error on your tax return after you filed, you can file an amended return using Form 1040-X. Reasons to amend include correcting errors, claiming overlooked deductions or credits, or reporting additional income. Time limit. You generally have 3 years from the date you filed your original return or 2 years from the date you paid the tax, whichever is later. Paying taxes in the U.S. includes understanding who has to pay, figuring out how much you owe filing your return, and making payments. Being organized and informed about tax laws can make the process smoother and help you avoid penalties.